You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it. You got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Boot Camp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, your Options Boot Camp drill instructors, Mark Longo and Dan Passarelli, will break it all down for you. If you trade options, you want to be smart about every decision. So why not choose the smartest platform for your trades? At public.com, you can view upcoming earnings dates directly in the options chain. You can queue and execute multiple orders simultaneously. Easily view contract performance over time. And if you have a question about any stock, you can ask Alpha, their AI for investors. But want to know the smartest part of trading options on Public? Earning rebates on every single contract traded. No other platform provides options trading rebates, and they reduce your trading costs to less than $0 per trade. So, make the smart move and switch to Public.com, the only options trading platform where you can earn rebates on every single contract traded. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. Fall in boot. It's time to get into peak options trading shape. It's time for Options Boot Camp.
All right, everybody. That music can mean but one thing. It's, some might say, my favorite day of the week. It's certainly a fun one. It's Education Wednesday. Time to roll out a little bit of Options Boot Camp, what indeed many have called for well over a decade, the premier options educational program. My name, of course, Mark Longo from theoptionsinsider.com. Check it out if you haven't been over there in a while. A lot of cool stuff lurking over there for you, as well as, of course, a link to a little cool thing called the Pro. Now, it's not for everybody listening to this show, and a lot of listeners to this show are just dipping your toes in options, and hey, that's fine. Take your time. Graduate to those next levels. You should, if you're that beginner, by all means, you should be listening to the full network, though, because there's a lot of great content. In fact, we have some listener comments and questions about that a little bit later, some folks doing exactly that. But you should, wherever you're getting this, make sure you're getting the full network, Options Insider Radio Network. Search for it on your platform, wherever you get this show. It'll be there. Get that. You'll get nearly a dozen shows coming at you. Feel free to pick and choose what you listen to, of course. There's a lot. I get it. But it'll serve you well. Option block twice a week. Vol Views every Friday. I know a lot of listeners of this show have graduated to Vol Views, and it has served them well. A lot of lovers of that. Vol Views just has a rollicking audience all around the globe. Folks love that one. That's a fun one. Again, very vol-focused. Like futures options, this week in futures options. You like a little bit of crypto, the crypto rundown. We got the advisors options, got off that yesterday with our buddy, Mr. Amberson. That was a good show, so make sure you check that one out as well. And then little birdie telling me maybe adding a new show to the mix. I don't know, maybe starting next week. People have been hitting us up for a while. When are you going to talk about futures? So guess what? We're going to be doing that starting next week as well. Spoiler alert. Let you folks in on it first here, but that'll be popping off next Education Wednesday, I believe. So Education Wednesday may also become Futures Wednesday on the network as the network continues to grow by leaps and bounds. All thanks to you folks out there and your support. We couldn't do it without you. Just like this week's 5-star review Coming in from Everett. I think he says M&D are the guys. I've never heard M&D with a little ampersand there in the middle. I never heard it said that way before, but it has a certain ring to it. M&D, of course, the D being my cohort, the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. A, welcome back to the show. And B, Dan, what do you think of M&D as our moniker, sir?
I love it, man. Hey, thanks for that nice feedback, Everett. Thank you. Yeah, I think it's great.
If we were a rock band, we'd be M&D. What do you think? Or maybe if we were doctors, we'd be M&D. There we go. That'd be a perfect name. The M&D Medical Group. M&D MD. What do you think? I would go to that medical group. M&D MD. Who wouldn't go to that? As we keep on rolling and go on into a little bit of your mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody. Let's do it. Let's get to your feedback. First, let's start by paying off some of our fun questions of the week. Last week, we asked you a very timely one. Again, a lot of you listening to this maybe years down the road. So this bit of a rearview mirror for you. But last week, of course, was DNC time here in Chicago. A lot of concerns. The city was transformed pretty much overnight into a literal walled fortress. It was something to behold, and something I hopefully don't have to behold again for quite some time, listeners. But that said, we asked you folks, beyond just the impact in the local Chicagoland area, do you expect this convention to have any real material impact on vol or the markets, or is it just a dog and pony show? 81% of you turned out to go the right way, just a dog and pony show. Not much really going on last week, at least from a impact on the convention perspective. 19% saying, yes, it will move VIX and XPX. You know, maybe if it was an open convention, like they were talking about, then probably would have been some tumult coming out of it, but this year it was kind of a done deal going into it, so not much impact. Fast forward to this week. Talk about impact, Dan. Some people say it's this name's market and we're all just living it. Of course, I'm talking about Nvidia. They are popping off after the bell today as we are recording, listeners. So it's a big one. This data point, everyone looks at the Fed, but the other thing a lot of people look at is Nvidia's earnings to see what the future means, especially when so much of the market is predicated on two things. It's predicated on the Fed rate cuts, which we have yet to see materialize, and Nvidia and just AI's continued dominance and the ability for them to just make up for all the other shortfalls in the economy right now. So Nvidia, they're on Wednesday, listeners. And again, as mentioned, our buddy Mr. Matt, he was on my Advisor's Option show with me yesterday, but he also crunches all of the earnings data for us on the website, which again, another reason why you should be going to theoptioninsider.com. We give you all that earnings, vol data, and season data for free. And it's great data, and nobody else has it. Unless you go to a big research house like Goldman and they charge you a bunch of money. But we give it to you for free because we like you. So we said, looking at Matt's data, NVIDIA options were pricing a move of about $12.75 heading into their announcement. Now, they may sound like a lot, and it actually is because we also crunched the data going back historically. That's another value we provide to you folks, historical context. And our long-term moving average for NVIDIA going back 12 quarters now, so 3 years, is about $10.50. That's how much they've moved on average after the announcement. So you can see pricing in about $2.25 on top of that. So we asked you folks, quite simply, is that too pricey? Is it too cheap? Or is it just right? And if you're listening to this today, obviously it ends right around the time of NVIDIA's earnings. So this should hopefully be out later today. And you folks on the podcast should be able to play too. But it'll be down to the wire. Make sure, that's another reason to be following us at Options on Twitter, because this stuff goes live throughout the week. And we want to play in it. Mr. Dan, your thoughts, sir. Is that too much, too little, or Goldilocks just right? And then B, more importantly, what do you think our audience thinks?
Well, a couple of thoughts here. To me, what I mostly care about is what I call the opening gap, which is the close before earnings and the open after earnings. So only the gap, not the intraday move. And over the last couple of years, we had 7.4% last time, 11.2 the time before, 0.2 the time before, 6.6, 26.1, but that was way back that was a year and a half ago, May of 2023. So what we typically see going into earnings is that vol is overpriced. In this case, I wouldn't go as far as saying it's massively overpriced. It is just about right, but there's a lot of volatility in volatility here. I have put on a straddle already. I'm not touching Nvidia. I wouldn't be touching Nvidia if I didn't already have on straddles in there. Unfortunately, they're a little bit tricky right now because the strike that I have is the 129 strike, and we are sitting here at almost 125. So I end up with a negative delta bias, which is not an ideal situation. So I'll see what happens, but try and scale out of a little bit of this to take a profit on some of these, and then still hold some going into earnings. I know it's a long answer, but it's the best answer I got.
So you heard Dan. He's size short. He's fading the hell out of Nvidia, listeners. That's what he's reading between the lines. Which way do you think our audience is going?
Oh, I bet a lot of people are saying too cheap, just because trader psychology. I think that's the way they would lean. Wow,
Dan usually has a finger on the pulse of our audience. This week, not so much. Too cheap, coming in a distant third, only 11.9%. Dan. It was, what was running away with it until about a few hours ago was Sounds About Right. He posted this on Monday. Sounds About Right was well over 50%. People really liked the price of the straddle for whatever reason. That has come down now to 45.8%, and too pricey, too rich, moving up to about 42.4%. So it's a neck and neck, listeners, between people who think it's too rich and people who think it sounds just about right. Nobody says it's too cheap, which is kind of interesting. Get over there, add options to make your voice heard. Speaking of making their voices heard, Dan is itching to make his heard because it is time for the Market Taker question of the week.
And now, it's the moment you've been waiting for. It's time for the Market Taker question of the week.
All right, everybody, welcome to the Market Taker question of the week. Dan, I know the question you get all the time, which is, how do you deal with such a handsome and knowledgeable co-host? So by all means, have at it, sir. The floor is yours.
Oh man, you know what? I feel like being nice today, Mark. I'm just gonna let that one go. So here's my question of the week. What are your favorite indicators? And I have several. First of all, being an options person, I'd be remiss if I didn't point out the ultimate options indicator, which is implied volatility. Reading implied volatility charts specifically of the underlyings that I'm considering trading or trading. But then as far as more traditional stock-based indicators, one of my favorites is slow stochastics. Another one is RSI. They tell similar stories, or at least for the way that I use them fairly similarly, though they do have their differences. Slow stochastics gives me the opportunity to identify reversals by using crossovers or divergences. And I use RSI in a similar way. And when you have both of those things confirming the same thing, then it becomes pretty powerful.
All right, there you go, listeners. Dan's favorite indicators out there, listeners, as we keep on rolling. Let's go. Speaking of Dan, we got one Dan to another here. We got Dan Toms asking our Dan. He wants to know, how did Dan's straddle trade work out? So, Dan, last week on the show, you were busy gobbling up straddles. In fact, we heard the ding on the show, so we knew you were live trading, which our listeners always love. That's a big part of the drinking game people play with the show. But Dan, I'm sure some of our other listeners want to know, how did you, Dan, How did your straddle work out, sir?
I'm trying to remember which one that was, but if I remember correctly, that was an SOXL straddle that I had on. And if I'm remembering the timing correctly, what happened is I took it moved away from the strike, put me into a small profit. But then, you're left with the dilemma is, okay, well, now I have a directional bias. So I closed it, taking a very small profit, and then the next day reopened it at a strike, at an at-the-money strike, which is not one of those big swing for the fences grand slam trades, but you can do really, really well with straddles by picking up those singles and doubles too. And then the times when variance just smiles upon you and you get one of those home runs, then it's all the better.
That's always the challenge with a long straddle, right? You're always swinging for the fences. You want that home run, but very rarely does it happen. 90% of the time is exactly what you just said, right? You get a little bit of a move, and now you're right. You're kind of biased in one direction. You're like, what do I do? Do I take it off? Do I readjust? Do I take off one half for a little profit and let the other side run? All sorts of ways you can go about it. And that's where the devil is in the details when it comes to long straddles, listeners. Easy to put them on, 1,000,001 different ways to take them off. And that's usually where you make your money or lose your money in long straddles, which is why we say so many times they are so difficult for a retail, especially outside of these aberrant moments where, realized vol is maybe a screaming buy for a straddle, or when the market is just whipsawing like crazy, mid 2020, early 2021, August 5th, those moments where the market just is roaring, then any long straddle almost will work, but it's for a very short period. Outside of those moments, remember, we've said it before on the show, you don't have that defense mechanism that Dan and I had when we were market makers, which is we could scalp gamma against all of our long theta decay. So it helped us offset some, if not all of it, on a daily basis. You don't have that as a retail. So one of the main weapons we had as market makers, you do not have. And so just bear that in mind when you're loading up on long straddles. They are ridiculously hard to make profitable if on top of that, you still have to also make up your decay every day, which is considerable, obviously, with a long at-the-money straddle. Keeping it on the straddle theme and the long straddle theme, let's go to this question from Ozipic. I apologize if I'm mispronouncing that, Mr. or Mrs. Ozipic. But they say, loved the surprise straddle episode. Oh, Dan, here's a comment we never heard before. Dan's enthusiasm was infectious. Usually they're like, can you poke Dan? Can you wake him up? But this week they're like, they loved him. I guess that straddle did get you going last week, Dan. You were pretty jazzed about it. Ozipic goes on to say, the episode was primarily from the long straddle perspective. Yes, it was. I would like to know if either of you gentlemen ever trade short straddles, especially in the short time frame, 1 week or even 1 day. Thank you. Well, I'll forgive you for calling Dan a gentleman. Obviously, you don't know better. Maybe you're a new listener, Ozipic. But yeah, when we talk straddles, we mostly talk about them in the long, at least I do, the long premium way, just because that's the way most people tend to view them. And I'm trying to think on top of my head if I recently or really ever done just a naked short straddle, and the answer is usually no. What I would tend to do is make it a more limited risk trade. So if I'm going to sell a short at the money straddle, and I have done that, but you'll mostly turn it into, I like an iron fly. That's kind of my way to go because as I've joked many times here on the network, an iron condor is an iron butterfly for cowards. The iron butterfly is a more, shall we say, fortitude-inspired or required trade out there. But that's the one where you're selling the at-the-money straddle. But again, you're not an insane person. You're buying the wings to make sure if you do get one of these crazy aberrant moves, and we are living in interesting market times, listeners, the chances of aberrant moves are higher now than they have been in the past. So it makes sense if you are going to do that. You don't want to trade that if it goes against you, which is going to wipe you out. And that's what a short straddle could do very easily. So do it from a risk mitigated perspective. Do the iron butterfly if you're going to do that. If that's too much juice for you, then I was joking. The iron condor is perfectly acceptable as well. That's obviously a short strangle followed by, a long strangle to protect against an aberrant move again. Obviously, that's giving you a little bit more cushion, a little bit more wiggle room around the at-the-money strike. So whichever way you prefer, don't let our teasing drive you in one direction or the other. But if I'm going to do a short straddle OZ pick. That's the way I'm going to do it, probably as an iron fly. And I trade them in the weeklies a lot. I haven't done a 1 day short iron fly. Again, that's something I've talked about us looking into for upcoming episodes, because a lot of you have written in with questions like this. Have you done this 0 day? Have you done that 0 day? So I think doing more episodes on particular strategies and their efficacy or lack thereof in that very short time frame of 0 day is certainly something interesting that we'll be exploring in the future on the show. Dan Ozypick wants to know, do you ever trade short straddles, especially in the short time frame of 1 week or even 1 day?
The answer is decisively yes, but I do it in a similar manner that you just described, Mark. And I'm going to throw one more in there that I do it very, very commonly, especially when it comes to earnings. My short straddle is a time spread, which you have to stop and think for a second and wrap your head around that statement, maybe, because how is a time spread a short straddle? Like, that doesn't seem to make any sense. Well, you're selling the front volatility. Well, first of all, let's say this. A call time spread is synthetically equivalent to a put time spread. All right. Like, because if you think about it, if you're short a call and then buy stock against it, now you're short a put synthetically. And if you're long a call and you short stock against it, now you're long a put synthetically. So if I have a time spread, short a call, long another call, then I don't have to buy stock and short stock. That's a wash. Just mathematically, it ends up by, the associative, transitive, I don't know what, I forget all the fancy names for math, but it's basically a short synthetic put and a long synthetic put, where the stock is not required, cancel each other out. So a call time spread is a put time spread synthetically. So if I have a call time spread, let's say I have 2 call time spreads, I can think of that as, short the straddle, because one's call, one's a synthetic put, and long a straddle, because one's call, one's a synthetic put. And if I'm shorting the expensive volatility in the front and buying fairly priced volatility in the back, then really all a time spread is, in my mind, it's just a hedged short straddle.
In Dan's mind, many things are going on out there, listeners, including hedged short straddles using time spreads. We talked about his earning time spreads approach in the past. Go back and check out some of our archived episodes about just that, time spreads. I know they're a little bit intimidating for a lot of you, but you'll get there. Take your time, work your way through the archives. You will get there, listeners. As we keep on rolling, let's go out to this next one from Carlos. Carlos Prates, maybe Prates. He says, new listener to OBC. Well, welcome, Carlos. He says, been slowly adding the rest of the network. Oh, there you go. And recently became a VolViews stan. Ooh, you're a stan. Wow, I like that. On the most recent episode, Mark and the rest said they were very surprised by an out-of-the-money VIX call stupid. Maybe I should have sent this into VolViews, but OBC is still my main show. Well, we'll forgive it. You could send it to the show. It's okay. He says, can he clarify why this trade was so outlandish in his view? Thank you very much, and please keep up the good work on the network. Well, thank you, Carlos. You're doing exactly what I was talking about at the top of the show. You come in through OBC, and then you graduate, you get more sophisticated, and you start listening to some of the other shows on the network, and they inform you about other things, like, let's say, the world of volatility, or the world of futures options, or crypto derivatives, or more active kind of retail trading and strategies and unusual activity. It's all there for you. So I'm glad to see you are moving on up the ladder there, Carlos. Next stop is the pro, but take your time before you get there. Make sure you're ready to go behind the velvet rope out there. But his question is a good one. We actually asked a flash poll about this last week, Dan. This came up during our Volatility Views show. And, it kind of just caught my eye. We were talking about size VIX paper last week. I mean, that's what we do every week on that show. And this one just leapt off the page at me. It wasn't the most sizable trade of the day, not by a long shot, but the strikes just leapt off the page, Dan. The first thing I saw, Dan, was someone bought 5,000 of the Jan 180 VIX calls for a dime, Dan. So that alone, what do you say when I tell you that, Dan?
Wow, that's crazy, man. It's interesting. I'll tell you that.
I don't think I've ever seen, I mean, we've seen a lot of garbage strikes go up there, par 110. I don't think I've ever seen a 180. So that was certainly and I've been doing that show for a while, so that's a new experience for me. But Dan, as we dug further during the show, I think it was our buddy, Mr. Dr. VIX, who brought this up. He said it was actually part of another trade. Didn't go up mark spread, but he actually contacted the VIX pit for clarification, and we got it. That it was actually part, Dan, it was also done, I should say, in conjunction with the Jan pars. So it was, I think, 3,000 of the Jan pars for 20 cents versus 5,000 of the Jan 180s for a dime. Now you might think, okay, they bought that vertical for a dime on a ratio for some weird reason. But no, it was a stupid, listeners. So they bought both. So what that means is they bought a ratio ridiculously far out of the money call stupid in VIX. So 3,000 of the 100s and 5,000 of the 180s, paying 20 cents and a dime respectively. They expire in January. Now, we've talked about this before. You don't need to get to those strikes to make money on these trades. And in fact, our biggest proponent of these garbage VIX calls is Mr. Matt from Morass. I had a chance to mention this trade to him yesterday, and it kind of blew him away too. Just the sheer outlandishness of these strikes. I mean, VIX right now, listeners, are hanging out around a 16. You're talking the 100, 180 stupid. They didn't even do the vertical. They did the stupid. So they bought both. Listen, I've talked before on this show about why I take a dim view of stupid. This one is even more kind of ridiculous. Of course, you're kind of in a weird spot with those 180s. Kind of an option where you can't really sell it and you can't really buy it. It's just a nonsense strike. So if we get up to that range, both of these options will be looking better, and he might make some money on this. But it's one of these things that is just so far out of the money, so outlandish. You could have done so many other strikes that are closer to the money for better levels than this. It's just mind-boggling. So that was why we brought it up. That's why we were all a little bit stunned on the show. Who was that? Carlos who asked that. It just kind of threw us for a loop. No one expected a par 180 ratio stupid in VIX. But again, and I've been doing that show for a while, so that should say something to you, and we all have. So that one kind of stands out as, in terms of kind of ridiculous paper, that's up there. In terms of the legitimate use cases for that, not really any. There's other ways. If you want to hedge a portfolio, hedge a book, something like that, there's other ways to do it. And certainly the stupid approach is a really weird way to go it. Let alone a ratio stupid and doing it nearly 100 handles apart. None of that really makes much sense on the surface, listeners. So it was certainly worthy of discussion on the show. I'm glad you found that intriguing as well. Dan, par 180 VIX stupid on a ratio for 30 cents. Or any other thoughts?
So they're buying the 100 strike and selling the 180 strike?
No, it was the stupid. They bought both.
Oh, they bought both?
Yes, they bought both.
Jeez. Are you sure they bought both?
I thought it was weird too, but Russell did contact the pit, and that's what they told him. Yeah.
Oh, wow. Phew, boy. I have a hard time seeing that one, man. How far out again was it? I'm sorry, I missed that.
January. So you're not even talking like 2026. This is just next January.
Damn, man. That is lottery ticket city, but yeah, I have a hard time explaining that one. Maybe if there's a bit, well, here, you know what? Let me pull up a chart of, well, actually pulling up a chart of VIX doesn't really matter because of the way VIX options are priced, does it? I guess I could look at VIX futures, which is still not perfect, but if we go back to 10 years, the highest price I see VIX futures trading, which is a better way to eyeball the underlying, is, well, I guess the high was 80.85. It hasn't even been to 100 in 10 years, let alone 180. To your point, you don't have to. It doesn't have to go through those strikes to make money. I mean, maybe what they're doing is because the 180s are just so far out of the money and nobody trades them and they're so illiquid, and they've got so much time until expiration, and we've got crazy town election stuff coming up pretty soon. Maybe they've just bought those 180s for ridiculously cheap, and they're just going to put in a resting limit good till cancel order that if there is a big pop and they get filled, they own the 100 strike for free. I don't know. It's hard to say. I mean, that's kind of a cockamamie plan if that's the plan, but it's the only plan I can backfill into something that makes even a smidge of sense.
Yeah, you think about that. You think, okay, maybe on a day like Monday, August 5th, they were looking all right? Because things were exploding. And to your point, by the way, everyone talks about VIX cash hitting 65 that day. That was before the open. And the futures, which are what the options are priced off, only got up to about a 37, 38. So just something to bear in mind, listeners, even in that extreme environment. And so we went back and looked, Dan. We did back test it back to that day. How did these options look on the Monday of August 5th? And guess what? Everything was going crazy. So everything widened out. So the market for these options, Dan, was no bid at roughly $2.
Oh, gosh.
So if you wanted to, like you're saying, okay, maybe you put a resting offer in for, I don't know, 50 cents and you get filled, right? You're not. There's no market for it. They don't trade. As you're getting back to your illiquidity nature, no one's going to trade them when things are going crazy. And then once things settle down, the market goes back to, no bid at a dime or whatever. So the opportunity to get out of these is borderline non-existent. That's another downside of this trade. If you're thinking, I'm going to get this great little pop and monetize this, you can't. You're the only person open on that strike. So you're trading with yourself. It's very much a Roach Motel trade. So many reasons not to do this outside of just the obvious extreme nonsense of it. Also the practical nature of it, the ability to get out of this when you would want to on the day when VIX cash is hitting 65 and the futures are skyrocketing north. You can't really. There's no bid for these things. So something to bear in mind. The practical side, the devil is in the details, I always say. And in this case, that is doubly true. Dan, let's get out of here on this one. This is the fun one. This one just kind of warms the old cockles. This is kind of the reason we do this show at the end of the day. He says, this is a bit of an update and a thanks from Just Jeff Morey. Oh yeah, he wrote in with his poor man's covered call question, I think a few weeks ago. And he writes, Sarges. Yeah, that's right. He liked the military theme. I respect that. He says, thanks for taking my question and offering some advice on air. And on the 301st episode spectacular, no less. That really tickled me as I literally yelled, oh, that's me, inside the grocery store as I was listening to you guys read my email aloud. That's funny. I can see some guys just shopping for frozen bees, listening to a podcast. All of a sudden, it's like, oh, that's me, freaking out. And the person next to him is like, what's wrong with you? It says, thanks for making this little boot feel special. Well, you're welcome there, Jeff. It says, I took your marching orders to heart, and I'm avoiding the poor man's covered call, as you guys so graciously explained that it's not a very good strategy for me. As I recall, you had a small account, Jeff, and it didn't really make a lot of sense. So I'm glad you took that advice to heart. He said, I have been using either debit spreads or credit spreads, depending on IV rank. That's good, because I recommended credit spreads. We talked a little bit about debit spreads, but I wasn't sure if that was viable for you. Again, you didn't tell us the exact specifics of your accounts, but I know debit spreads can be a little challenging if you have a smaller account. But he says he's doing those based on the implied vol rank, and I learned how to do it from both you and, he puts in parentheses, averts his eyes, Sergeant Passy. I like that, Sergeant Passy, from your vast library of past episodes. I'm going to start calling you Sergeant Passy. I like that. He says, you guys both rock, and I want to thank you guys for educating me and the newest generation of options traders, Jeff. Well, you know what, Jeff? You rock. Your emails are awesome. It brought a smile to my face. I think you even warmed the cockles of the black-hearted one himself, Mr. Dan. I think his heart grew 2 sizes today as well, Dan. Is that the case?
Yes, exactly. Just like the Grinch. Yeah, that is, I love that. I love that. I might start calling myself that.
So I love the Sergeant Passy. That's awesome. That's going to stick. And I love the notion of him just being in like the frozen vegetables aisle and just yelling out loud. He's someone looks at him like, what's wrong with that guy? Is he crazy? So that brings a smile to my face as well. Glad to hear it, Jeff. Keep us updated. Let us know how your credit/debit alternating spread strategy works out. All right, Dan, I don't know how we're going to top Sergeant Passy, so we might as well just get out of here for this week. Last week, you were the world's first, options lawyer. Now you're Sergeant. You just keep gaining new titles.
Yes, exactly.
All right, Sergeant Passy, what do you got for us, sir?
Yeah. Well, as I typically close, if you have questions, obviously, throw them on Twitter and Mark will get them. We can address them on the show. You can always reach me, though, also at our website, markettaker.com, 2 T's in a row. And you can grab a bunch of free content there, join our community. So we will look forward to seeing you there as well.
And we'll look forward to disrupting other normal life events with our podcast. So let us know if maybe you're in church listening to us and you yell out on the show and something like that. That'll be kind of fun. Or you're in line to get gas and all of a sudden you yell out, you hear it on your show. That's always fun to disrupt your normal activities with a little bit of OBC fun out there. And of course, you know where to go to get a little bit more fun in your options trading account. Public.com, the place to go to kick the tires and light the fires. Glad to see so many of you have taken us up on that and gone to investigate it. At the end of the day, always do your own due diligence on all these platforms. But the rebate is certainly an intriguing thing. And the fact that they're so willing to listen to you folks and say, hey, here, what do you like? What do you think we should add? That's the approach new entrants to the space should take. Rather than rolling out and saying, here we are, we've solved all the problems of the world. We are the options monolith to rule them all. They know they're coming into this game. They know options traders are very picky and very demanding with what they want. And if they don't bring it, people won't go there. So come in the door for the rebate, kick the tires on the platform, and see what you like. Tell them what you like. Tell them what you'd like to see added. Of course, tell them that you heard about us on the show when you're in between shopping for frozen peas. And that'll go a long way towards keeping the show coming to you for many more years to come. Speaking of things coming to you, I'll be back in a little bit for our pro friends with another great pro Q&A with our good buddy Scott Nations. Haven't chatted with him in a while, but he's eager to tackle all your questions. Got a feeling it's going to be a lot of vol talk on that episode, so get them in now. I know a lot of you already started sending in your questions to the members hotline. If you haven't joined the pro yet, you want to take advantage of these awesome opportunities to pick the brains of many different people from the world of options and derivatives, as well as options oddities at the end of the week and all sorts of other fun. Only one place to go, theoptionsinsider.com/pro is the place to go to get past the velvet ropes. I'll be back with Scott at 3 p.m. Central. And then, of course, back again tomorrow for our usual doubleheader of the option block with the Flow Master and This Week in Futures Options with the folks over there at CME. Friday, of course, we're just talking about Vol Views. And then back again one more time for the week for our pro folks for options oddities. Then we kick things off next week again with the option block, the crypto rundown, a pro Q&A or two until we get to next Education Wednesday and another episode of Options Bootcamp. Stay safe out there, everybody.
Check out public.com if you want to literally earn money to place options trades. There are no commissions or per contract fees. And Public gives you a rebate of up to 18 cents per contract traded. Discover why NerdWallet recently gave options trading on Public 5 out of 5 stars. And start paying less than $0 to trade options. Only at public.com. Paid for by Public Investing. Options not suitable for all investors and carry significant risk. Full disclosures in podcast description. U.S. members only. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.